Stocks ended at records on Friday as investors received disappointing earnings results from Apple and Amazon. Otherwise, it was a solid reporting season for most companies. On Friday, the S&P 500 set a record closing high. The index posted a monthly gain of more than 6.5% in October. This was the best single-month gain since November 2020. The Nasdaq also squeezed out a fresh record level, even with the poor reporting from Amazon and Apple. For Wall Street, the results from Amazon and Apple appeared to vindicate concerns that mounting supply chain disruptions, labor costs, and material shortages are challenging companies heading into the holiday season. As investors, we can look back and see the mixed batch of economic data, which included a weaker than expected third quarter gross domestic product. The concern now is whether the fourth quarter of this year and the first quarter of next year remain strong. Will inflation keep going, or will we see a peak in the next 6 months? Will supply chain issues continue, or will they be resolved? And what about reopening? At least for the stock market, we're entering the strongest month of the year. Going back to 1985, we've experienced a median return of 2.1% for the month. And with inflows into equity funds and corporate buybacks to the tune of about $8 billion daily, the fundamentals say we go up. So, what did the charts say? Let's take a look. And today we're going to take a look at two charts, beginning here with the 2-year weekly on the spiders, the SPY, and the close on Friday was 459.25. Now, after having this move down, recovery, and then on up, we're more or less in line with this channel that goes way back here. Moving through there, you see the bottom channel line for the most part, and then the top channel line moving through here. Not a straight line, but you get the idea. So we're heading on up here, and I imagine that we're going to get to this sweet spot, perhaps next week, the week after. But things look decent from here. Into the volume, the one cautionary flag is that volume has declined all the way through here the last several weeks. So keep your eye on that. Into the MAC, you can also see another cautionary sign with the fast line moving up from below. There's going to be some resistance here when it meets the slow line. We want to watch that resistance. We want the fast line to be able to move up and through that slow line. So it's coming, and it's coming soon. You can see that here in the histogram. We're still below zero, and once we hit that zero line, there's probably going to be some resistance. So keep your eye on that. Moving down here, price rate of change looks fine, and so does the RSI. We're at a moderate 70.60, and this sweet spot seems to be above that 70 and below that 80 level, and we're just about to enter that, so that looks good. The stochastics also look like they're recovering, and the Williams does too. So back up to the price chart, and one last look, and now let's go ahead and take a look at the 6-month daily chart. And now we're looking at the 6-month daily chart on the spiders. And if you take a look here in the lower left, this channel that we were running through, this was the bottom trend line more or less through here, and then the top trend line more or less through there. Now you can see the breakdown here at that bottom trend line came on down here, bottom to base, and then we had the recovery. Now we're at this level here. If you extend the bottom trend line up through like this, you can see that this trend line potentially becomes a resistance line. So the question is, do we move up and through that bottom trend line and reestablish this channel, or do we establish a new channel, say through there, something like that? If we do have this lower channel line, then the market has taken a downward shift. It's not necessarily all that significantly negative, but something to keep our minds on. Here in volume, we had the decline in volume there, but in the last several days or so this week, we had a kick up. That's good. We also continued on up in the MAC. We have that fast line there and the slow line there. That separation is decent, means that we still have plenty of power when we're above that zero line. And that separation gives us enough room to either continue up or perhaps move sideways. I think we continue up just slowly. But into the histogram, you can see that this starting to roll over a bit, and we have a deceleration in that MAC. So that's a little bit of a cautionary sign, not much. Into the price rate of change, looks good. We're well above the zero line, moving up here. We haven't been there since back here in early July. So things are looking good. Here in the relative strength index, we're at a 76.94, and that does seem to be in that sweet spot there, 70, and here 80. So hopefully we can stay within that range there. Into the stochastics, and that looks good. Are we going to establish another cycle move like this or not? I'm not quite sure. The market always has surprises. Into the Williams, you can see that we're in that overbought territory, which is above that -20 to 0 level, and we can stay up there for a period of time. It'll take a break every once in a while, but for the most part, things do look good on the daily as well. Back up here to the price chart. Let's just see what happens with the market in the coming weeks to see if we set up a new channel here or if we're able to break up and through that trend line into that old channel line. If we can, then the market has a decent amount of power. It's not to say that it's weak here, but it's just if it does set up in this channel down here, the market has simply shifted lower. And if that's the case, we just need to remain prudent. And for today, that's ChewDog Charts. Thank you.